back to another episode of Not Financial Advice. My name is Sean. Today is Monday, February 12th. We're halfway through the trading day today. And today we are seeing what looks to be a breadth thrust or an expansion in the market rally. Today, my portfolio is up $520, up around 0.75%. Handily outperforming the S&P 500, which is up 0.36%. We can see that the Dow Jones is outperforming a bit. The tech-heavy NASDAQ is underperforming, but the Russell 2000 small cap index is strongly outperforming, and the portfolio is sitting at $71,600. So today, my portfolio is being benefited from unloved, boring, cheap value stocks no one cared about a year ago. And if that's the direction that this market is turning towards, I have a stock very similar to that I'd like to bring to you today that I'm very excited about, which is, in fact, eBay. And so we're going to teach you everything that you need to know about eBay and do a quick update on how my portfolio is doing today right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, guys, thanks again for tuning in. I'm going to ask you to like the video and subscribe to the channel if you haven't already. And looking at my portfolio here, let's just take a look at the top 5 gainers and decliners for the day. So starting off on my top 5 investments today, Monday, February 12th, what we can see is that we have Williams Sonoma up 3.5%. Up 3.8% is Intel. Up 4.2% is Green Thumb Industries. Coinbase is up 4.7%, and Scott's Miracle-Gro is up 4.9%. Taking a look at the bottom 5 decliners on the day, what we see is we have Starbucks down 1.25%. We have Tesla down 2%. We have Seneca down 2.6%. Curaleaf is down 4.6%, and Trulieve is down 6.4%. And so, we're seeing a lot of small cap value and cyclical stocks outperforming today. Again, up over $500, trouncing the S&P 500. And so, we can just see some of these names: cyclical, risk, risk, cyclical value, cyclical value, cyclical value, lower quality value. Consumer defensive, cyclical, growth, large cap value, consumer cyclical, small cap defensive, industrials, CMI, 3M, et cetera, Walgreens Boots Alliance, large cap value. So this is how the market's performing today, and I'm really excited to bring to you my findings on eBay stock. And so as we're getting into this, I actually have a question for you. I want to hear from you if you're someone who's used eBay before as a customer, either a buyer or a seller. I want to hear about your experiences on eBay or your thoughts on eBay as an investment. Truly, as I'm considering this as an investment myself, that would really help me. So any thoughts or experiences that you've had with eBay, please feel free to drop that in the comment section below. I look forward to reading those comments and replying to each one individually. A lot of people that I've been asking about this in the last few days are saying, oh, is that still a thing? Is eBay still a thing? I didn't know they were on the stock market. And so let's just jump right into the topic of today's video. I'm going to ask you to like the video and subscribe to the channel again, and we're going to dive into it right now. So taking a look at eBay stock, over the last 5 years, the stock has performed very poorly. The stock is down around 47% from its all-time high. And so, when you see a brand name stock that's of decent quality that's down around 50%, that's typically been a pretty good harbinger of some potential outperformance and gains for me. And so just this alone has my attention. From its most recent low, the stock has gained right around 15% today, a huge rally in eBay shares. So let's get into it. We're going to sort of go over some of the pros and cons in reference to a potential investment for eBay. And so what we can see here, a secular trend towards retail moving online. Now that's a fact. Prior to 2020, something like 5 to 7% of all consumer retail shopping happened online. In 2020, 2021, that went up to about 15%. And it is projected that in the next few decades, as much as 40% of consumer shopping will be online. And so that is definitely a pro for an investment in eBay. Um, Another thing that we can see here is that eBay really has a user-friendly interface. And so think about AOL versus Bing versus Google. Back in the day, Google just gave you this plain white search engine, and its simplicity was part of what made it so successful. I actually see a similarity there with eBay, even in opposition to my top holding, which is Amazon. So we're going to look at that together in a second. But eBay also has investments and is doing tuck-in acquisitions of relevant competitors. So they're invested in G Market, which is known as the Amazon of South Korea. They own about a 20% stake there. So I see that definitely as a tailwind for eBay. But additionally, eBay has brand partners. So companies such as Best Buy or Crocs list and sell products through eBay as well. But we understand it more to be like an online swap meet. But it's also a place where you can buy new goods from trusted sources. So there's a short interest of 5%, which isn't a lot. There's a potential for mergers and acquisitions. Not super likely, I don't think. I don't think the government would allow someone like Amazon to buy eBay, but um, maybe Google would or something like that. So overall, eBay has a really strong balance sheet, which we're going to look at in detail together as well. But that'll round out the pros for a potential eBay investment. I guess one I would add is it's just relatively cheap for on a cash flow basis, which obviously I like. But taking a look at some cons on a potential eBay investment, there is in fact competition. So like I said, Amazon, Facebook Marketplace, etc. Craigslist. But one thing that I will say is that, on Facebook Marketplace, you have to have a Facebook account, you have to be somewhat social, and you have to go meet people in person. And not everyone wants to do that. And so, I am putting to you that I think that eBay has a small moat. And I don't think that they're going anywhere, which obviously is a requisite quality in any investment, is that the company will still be around 5-10 years from now. But another con, there is in fact some short interest in this stock. About 5% of the outstanding shares float is shorted. So some people definitely see this stock crashing and burning. I don't agree. One of the things those people might be considering is if eBay is a value trap. We're going to discuss that. Um, but as with any stock, you could look at international conflict and macroeconomic risk factors as a risk in this investment. No different from any other company. But also in a potential recessionary environment, there will be a decline for consumer discretionary goods. A threat for this sector, consumer discretionary, that eBay lives in, same as Amazon, et cetera, et cetera. So like the video, subscribe to the channel, and I'm going to bring you now just a short clip. I've made sure that it's in high definition. I've sped it up a little bit, but this is something I don't always share or do, but it's always part of my investment process. And what I do here is I call this the idiot test. So Warren Buffett says, don't invest in a company that couldn't be run by an idiot, because at some point every company will be. And so I'd like to take a look. I can watch a short clip and see if the CEO seems like an intelligent person or not. So let's do that together and also learn a little bit more about where eBay is sitting in the market today. Here we go.
Let's talk first about that outlook. Analysts love to hear a good outlook, and I've learned in the last 20 years that it's probably better to underpromise and overdeliver. Is that what you're doing here?
Look, we're really pleased with the momentum that we're seeing. We beat across all the metrics, the expectations in the quarter, and the strategy that we've laid out is working. We've had this strategy of going after focus categories. Our focus categories grew 7 points faster than the rest of the market. When we look at the long-term opportunities for eBay, we feel really great about it. The strategy that we have is really focused on 3 elements, which is, in raising the bar and going after relevant experiences, building scalable solutions, and building magical innovations, really reinventing the future of e-commerce for enthusiasts, and it's working. We're increasing customer satisfaction on the platform, and our new innovations are being well received by customers.
So full disclosure in that I I am like an eBay power user, and I have been for over a decade, maybe two. But I'm 50 years old, and I buy and sell motorcycle and car parts, right? That's so typical. You need to grow beyond me in order to please the street. How are you doing that?
Well, thank you for your business. Like other enthusiasts, our motors, parts, and accessories business for the second quarter in a row grew at market rates of growth at mid-single digits. New buyers in that category grew double digits faster than the rest of the platform, so it's working well. But you ask, how are we acquiring Gen Zs? Well, we're doing great work across the board in, for example, sneakers, and we're authenticating sneakers and bringing new sneakerheads in. This quarter, we just launched Authenticity Guarantee for streetwear, bringing in leading brands in streetwear. We're also very strong in a fashion standpoint, bringing in a younger consumer and a more female consumer. We just acquired a company called Certa Logo based out of Milan, which helps drive sustainability in fashion and drives pre-loved through some great AI technology. We're sponsoring Love Island over there. So we're doing a great job.
All right. Okay. So when I see CEO that does a few things that we just saw there, number one, I love seeing from the CEO immediately, thank you for your business. So that's a great business leader. But also, what we can see there is they're doing some of these acquisitions. eBay is known for being sort of like an online swap meet, but not only that, eBay is trusted by people that when you go on there and spend money, you're going to get the product that you bought. you know um, they have ratings from merchants, and so that gives a good level of trust, but you can also buy branded products from brands. But additionally, the guy just said pre-loved when he was talking about used goods. I mean, I'm all in on this guy. And, he's looking to expand the footprint of eBay. It's known mainly as a little bit of an older demographic because this is one of the only companies that survived the dot bomb crash of 1999, 2000. And so it's very much so a specialized retail platform. They do a lot in automotive. They also do things like board games and trading cards. And they also do things like antique furniture. And so while eBay isn't the biggest online platform, I think that they have some level of a moat because the consumers that they do have are enthusiasts. They're enthusiasts who are pretty obsessed about one product category. And he goes on to say in this interview that enthusiasts in one product category are bleeding over into purchases in other categories on eBay. So while they also sell general merchandise, they really do a good job sort of being there as an online platform for those enthusiasts or collectors. And they're looking to expand that into a younger, more female demographic and expand into a little bit more of a general retailer, including in fashion and streetwear. Additionally, mentioning that they have new programs to guarantee authenticity, continue to build trust, things of that nature. And so all of that sounds really, really good to me. Now, what we're going to do is have you like the video and subscribe to the channel. And we're going to come over here and we're going to take a look at Qualtrim. We're going to take a look at eBay, and we are going to see the financial, sort of metrics and performance of eBay stock. So as we can see here, eBay is sort of in that mid cap to small, large cap range. Pretty low market cap of $22 billion. And we're going to come back to that in just a second. But we can also see a very affordable forward PE of 9.8. Very, very affordable on a PE multiple. We can also see that they have a free cash flow yield of 8.5%. People do not want to buy eBay stock to get access to its cash flow. People think that this stock is going to zero. I don't agree with that. And so let's take a look at some other stuff. So dividend yield, they're paying a healthy market beating 2.4% dividend yield, almost 2x the United States stock market at a very low sustainable 20% payout ratio. What this shows you right here is this company could easily support a 4 or 5% dividend yield in all likelihood. So as always, Qualtrim is a suite of software I pay for to look at stocks, not one I'm affiliated with. I'll leave a link for Qualtrim in the description below. But let's get into our checks and minuses on eBay stock. And so let's take a look first at revenue. So what happened here, I found out eBay used to own PayPal. They were pressured by activist investors to sell it off, and that's why you see this revenue drop. And so the time periods that we're going to be looking at for this company will just be over the last 10 years. And so this is where the spinoff of PayPal happened. What we can see here is the company's been growing at about 1.75% from this year to this year. That does not beat inflation. So on revenue growth, eBay earns a red X. Okay, so let's look at our next metric. So our next metric is in fact going to be free cash flow. We can look over the last 10 years after the PayPal spinoff. We will go ahead and adjust this and X out any bonuses paid to executives in stock. Taking a look at this, we do see free cash flow declining, but it is sort of in this flat range, right around $1.5 billion. I'll actually give this a neutral rating because one thing that someone has to understand is that, well, this could be viewed as a value trap. A company that consistently produces a level of free cash flow growth, there is a value to pay for this company. And so we're seeing a company that routinely puts up about $1.5 billion of free cash flow each and every year. There is a value to that, which we'll be looking at the end of the video to get a fair value estimate on this stock. So the company will be rated as such. Let's keep pushing. Let's see what else we can find here. So they're going to earn a red X on earnings per share. I'm not exactly sure what's going on here, but the trend is overall okay. EPS of 142 in 2015, up to as high as 354 in 2020. Obviously, that pulled forward a lot of online retail, but I feel like this is, sort of a deep value, potentially turnaround play. But let's see what else that we can find. So cash and debt on this company. Let's look over the last 10 years. So they're holding debt steady, and at this time they have a similar amount of cash and debt. I will give eBay a check mark on this metric. Some pretty good solvency here. Let's now take a look at dividends. They've never cut. They have a low payout ratio, and dividends have been growing at a rate of around 11, 12, 13, 14, 15%. Very fast and strong dividend growth, beating inflation. eBay, dividend rating, check mark. Big part of this story is about its dividend. Now, let's get on to some other metrics here that inform our decisions. Let's take a look at shares outstanding on this company. So the stock price has done pretty horribly in the last 5 years. And as you can see here, they have been buying back shares aggressively. They've been buying back about 11% of the shares per year. This is huge value for a shareholder, I believe. A share in this company bought 5 years ago means you're holding a significantly higher percentage of this company. Just looking at it, if you bought one share 5 years ago, you now own twice as much of the company as you did then, and this doesn't seem like it has any inclination that it's going to be slowing down. So eBay is a massive repurchaser of shares, massive green check mark rating on eBay for not diluting us. Now, let's take a look at ratios on eBay. Let's look at return on capital employed. I actually love this. After the spinoff of PayPal, right around here, we can see a general upward trend here, and returns on capital employed. It looks like a median number is going to be somewhere around 12.1%, maybe 12 or 13%. That is decent. So I will, in fact, be rating eBay with a check mark for profitability, returns on capital employed. Now, let's also take a peek at some of their other margins. They've had some issues here, but it looks like they have the capability of having a bottom line profit margin in that low 20 range. And so we saw a big spike after they spun off PayPal. For bottom line profit margin, I'm going to give it a neutral rating because they're just having some struggles here, but I overall feel pretty positive with this. So, taking a look at this company on its capital expenditures and expenses, they're going down. This was a good thing about their spinoff of PayPal, and so their capital expenditures are going down. So potentially could be referred to as a capital light business. Big green check mark for eBay on expenses, not one that we see in a lot of the investments I investigate. So check mark here, and overall things are looking pretty good. But I want to just draw your attention to one more thing. And so think of a business in this way. If there was a business that cost $22, right? So all the shares of eBay combined are $22 billion. So to make it simple, say that this company costs $22 billion. Would you buy a company for $22 that reliably did about $1.75 of bottom line take home in your pocket revenue per year? Would you pay $22 for a company that every year is going to put almost $2 in your pocket? I think that I would, and that's really the right way to be viewing investments, as not just tickers and shares that go up, but in buying the whole business, what is its attractiveness? And this is the way that a great investor analyzes a business. So on a free cash flow basis, this looks really strong to me. So I'm going to ask you to like the video, subscribe to the channel, and let's just do some qualitative stuff here on eBay. So how does eBay make money? So eBay makes money through generating revenue via transactions across its platforms, also in selling marketing and advertising services. And let's see what else we can see here. So key takeaways: as one of the few lingering successes of the .com era, eBay sports more than 133 million individual users. Additionally, the company is heavily invested in other companies and has at one point or another owned all or part of PayPal, Skype, StubHub, and others. And so they have 4 business segments: United States, which is about half of their revenue. And then you have United Kingdom, Germany, and rest of the world. So in eBay, you're getting essentially an ETF where half of the revenue is international, and that's pretty cool. Incorporating another thing, if you've been with me from the very beginning, I used to do much longer format videos, and that's what I'm coming back to today. And so I wanted to take a look at the technicals on eBay. So what you can see here is over the last 3 months, is that the chart looks slightly bullish, but what we can see is the stock is currently trading at $43.37. So this isn't an overly strong chart. It's a little bit of consolidation. It's slightly in an upturn. I'm not a chart master, but I thought I'd bring this in. If this means more to you than it does to me, you can sort of just have a look at the technicals at a glance here. So I thought that I'd include that for you guys. But now what we're going to do is sort of analyze the total addressable market or the potential of eBay. And so taking a look here on this website, we can see that Amazon has 38% of online retail. Walmart has 6.4%. Now, Apple has 3.6%. But I've asked myself and others who are big iPhone people, can you buy physical goods off of the Apple ecosystem? I mean, you can obviously buy Apple phones and headsets, and you can buy apps through Apple. But in that sense, I don't really think that Apple sells physical goods. What I'm really seeing here, and it's tied, right? But Target's at around 3%. eBay's at 3%. Target's only at 1.9, and Home Depot's only at 1.9 as well. But Best Buy's at 1.4. What I'm seeing here is it looks like eBay really is tied for a distant third place in online retail. It is not priced for that. It is very cheap. And so they own a good chunk of online retail. And we're going to sort of see the type of people that use eBay here. So like the video, subscribe to the channel. You know, here's what happened when I decided to get into their website, and this is where I just saw how clean this website is, right? And I didn't have an eBay account, but it said, "Hey, do you want to log in with Google?" It created an account for me just by pressing 2 buttons. And so that's obviously really, really good. And what we can see here is let's just look at some of the things that they're highlighting. So they're selling motorcycle stuff, uh, more automotive stuff, sales on electronics and shoes for President's Day, uh, eBay gift cards, et cetera, et cetera. And so, they have this program here, eBay Guaranteed Fit. So they're just bringing a lot of confidence to the consumer that they're going to get the right product that they need. But you can also see 50% off on gaming gear. And so that's more of that enthusiast market. Automotive is an enthusiast market. And, I went through this website with a friend of mine who's a mechanic, and he said, wow, I did this search for this very particular automotive part on eBay. I also did it on Amazon. Amazon didn't have any idea what I was looking for, but eBay gave me relevant results. And so just looking at this overall interface, this is just really clean and slick. I think it's a lot cleaner looking than Amazon. I think it's very similar to a Google web search. I think it's just, very visually appealing. It's just drawing my attention right to where I might want to be. And so this is sort of the interface. My other friend, the mechanic, also looked at watches on eBay. This is another big part of where they put an emphasis on, and they're certified watches. So not only can you buy a hard to find board game from an individual and see that he's got a 97% rating out of 300 transactions, but you can also buy directly from companies. And so just look how clean this website is. I don't think this company's going anywhere, guys. So let's take another look over here. We're going to get into the nitty gritty before I give you my fair value estimate on eBay. But let's take a look at their most recent investor presentation. Like the video, subscribe to the channel, and let's see what we can see here. So this is one of the first things I want to draw your attention to. So eBay has over 16 million enthusiast buyers. In the past 12 months. And what that actually means, if you zoom in really good, 16 million enthusiast buyers. So eBay describes an enthusiast buyer as a buyer who has at least 6 purchase days and $800 plus of annual spend in the last 12 months. And so they have 16 million people in the last year who've bought stuff on eBay 6 days out of the year and spent at least 18 or $800. So they have very loyal people who shop on eBay, and that's why I think this company has a small moat. Let's see what else we can see here. So relevant experiences. So the Guaranteed Fit program. Um, eBay launched direct submissions to the eBay vault from personal collections like trading cards here. This is funny. They did 1,000 eBay live events. So they did like eBay sponsored swap meets. That's kind of cool. So this is another thing here. They're selling ads. They have 400 million plus live listings. So they're getting, not only 10 or 11% when you sell your, used pair of boots on eBay, but they're also charging bigger companies for ads using smart targeting. Let's see what else we can learn. So this is freaking cool, and it got me wanting to use eBay. They're using AI to help you list your product for sale, and that also makes me think, if people fall on hard times, they might turn to eBay to sell some of their belongings. That gives a little bit of a defensive aspect that just regular folks can list things. So you can create a listing and upload a photo, and then AI is going to view the photo that you posted, and it will write an accurate and it'll even give you a suggestion of the price range you should sell it for. And so you can list something on eBay, all done in seconds. I think that's pretty freaking remarkable. So, one thing that it seems that eBay and its leadership team does is under promise and over deliver. And on such a low PE stock, all that you have to do is have mild upside surprises. I recently heard a great message about the market that the market doesn't respond to good or bad news. It responds to improving or worsening news. And so any improvement in such a low multiple stock could really send shares higher. But you saw for the quarter, they came in above their guidance for revenue. They beat on their guidance for operating margins, and they beat on their own guidance for earnings per share. Okay, and as you can see here, eBay is currently trading for about $43 a share. And so let's get over here and do our discounted cash flow valuation to get an idea of what eBay is worth per share based on its cash flow. So as you can see here, taking the data from Qualtrim, over the last 5 years, eBay has put up an average of $1.6 billion a year in free cash flow. As of the most recent quarters, they have $8.7 billion in cash, a little bit under $7 billion in debt, 532 million shares outstanding, and I've made some conservative projections for their future growth at 1.75% over the next 5 years, down to 1.25% year 6 through 10, with a terminal growth rate of only 1%. So not demanding inputs by any means, but a required rate of return of 10%, $43 stock, value based on free cash flow is 39. Let's take a look at a valuation based on its healthy dividend next. All right, so now taking a look at the value of eBay based on its dividend, it currently pays 25 cents a quarter on its $43 stock, which is a total annual dividend of $1, a dollar of dividends per share of eBay owned. And so, with a required rate of return of 10%. For total returns, and then an expected growth rate on the dividend of only 9%, which is extremely conservative. The value that I'm seeing on eBay's $43 stock based on dividends is $109. And so when we take the average of those numbers, we have $109 and the free cash flow level was around $39, I believe. And so plus divided 2 equals, so I'm seeing a $43 stock, but combining the free cash flow valuation as well as a dividend discount valuation, I'm seeing the stock is worth potentially as much as $74 a share. And so when I say that, the stock is potentially worth as much as $74, what you would need to see is you would need to see catalysts, you'd need to see quarterly earnings beats, you'd need to see further success of their initiatives to have cost cuts and efficiency, to grow their AI applications, to broaden out their consumer base to younger and more female consumers. But when I say the stock is worth somewhere around $74, take it with a grain of salt. Give that a plus or minus of 15 or 20%. But ultimately, a couple of good quarters and a multiple expansion from a 9 PE back to something like a 13 or 14 PE, we can see that the stock at one time traded for as much as $81. So overall, I do feel pretty comfortable saying this stock is, worth probably somewhere around 60, 65, $70. And over the long arc of history, I think this stock is likely to do well, given its max drawdown and all of the great attributes that it has. So, as always, I'm Sean. This is not financial advice. If there's a stock or an ETF you'd like for me to review, drop that in the ticker symbol below. Thanks so much for stopping by, and I'll see you on the next one.